And we lead the program with regulators in the United States planning to file a lawsuit against one of the world's largest cryptocurrency exchanges. The Securities and Exchange Commission has notified Coinbase Global that it will sue the exchange if it moves forward with plans to allow users to earn interest lending digital assets. The news was announced in a statement from Coinbase's chief legal officer, who said the Lend product would be delayed until at least October. While the SEC says it doesn't actually comment on, quote, the existence or non-existence of possible investigations, Chairman Gary Gensler has previously characterized the crypto space as the Wild West and said some of the products offered by trading platforms bring them under SEC oversight. Meanwhile, Tuesday was a wild day for the world's most popular cryptocurrency as El Salvador became the first country to adopt Bitcoin as legal tender. Now, while there were issues with the rollout, Bitcoin's price faced a wild swing, plunging from $50,000 to just below $43,000, but has regained some of those losses moving into Wednesday. Other popular tokens like Ethereum and XRP also followed similar trends on all of that news. So for more on this, let's bring in BoomBust co-host Christy I and Michelle Schneider. She's a partner and director of trading research and education at MarketGauge.com. Christy, I want to start with you. From what we know about this situation, why is the SEC taking issue with this plan from Coinbase? And beyond a delay, how are they responding?
Well, apparently the SEC has said that some digital assets and platforms are operating as or offering securities, which brings them under the SEC oversight. Now, previously, they'd characterized all altcoins as securities until they're deemed as not. Coinbase CEO Brian Armstrong is now disputing the view that the lending product is a security under the purview of the SEC. He tweeted on Wednesday in a 21-post thread detailing the SEC's dealings with the firm, saying that there has been some, quote, really sketchy behavior coming out of the SEC recently. Armstrong explained that Coinbase approached the SEC earlier this year to brief them on the up-and-coming Coinbase Lend program that basically just offers a 4% annual yield on deposits of USDC. Nothing too fancy. So according to Armstrong, the SEC responded by telling them that the lending program is a security without any sort of explanation and threatened to sue if launched. They, quote, refused to tell us why they think it's a security and instead subpoenaed a bunch of records from us, demanded testimony from our employees, and then tell us that they will be suing us if we proceed to launch with zero explanation as to why. Now, Coinbase's chief legal officer also disagrees with the SEC as he questioned the assertion that the lending feature can be deemed as an investment contract or a note, because customers wouldn't be investing in the program, but rather lending the USDC that they currently hold on Coinbase. So the only clarification that the firm has been provided so far is that the lending program is currently being assessed under the Howey test, the Howey security test. So according to this tweet, the SEC won't share the assessment of the test itself, only the fact that they have done it.
Now, Michelle, I want to go back to Gensler's Wild West characterization of the crypto space. We know those in the industry have pushed back against regulation. So does this really fall into the purview of the SEC? And in your opinion, should they be regulating the different aspects of this business?
Well, just to jump a little bit on what Christy just said, because it was a very thorough answer that addresses that, essentially it does bring into the question what is a security, and what's unprecedented about this is that the SEC wants to control every aspect of the crypto space, which they don't do in other places. In terms of banking regulation and the overall stock market, yes, they deal with the securities, but not everything that goes into the different companies, and that's in essence what they're trying to do. So what does that really have as an impact? Well, first of all, it would be a long way coming if that really does happen. But it turns the whole crypto space into not only something that's way more political, which the whole idea of cryptocurrency is to be apolitical, it puts on regulations to the point that will choke innovation, definitely disrupt the free market for traders, and it basically becomes a barrier to entry to these smaller companies that might want to try to get into the space. So in essence, his Wild West comment really will change the whole nature of the business, because the whole idea is Wild West may be a wonderful little hyperbole metaphor, but the truth of the matter is it's there for a reason, and it definitely means that in terms of the whole blockchain technology, this innovation that we're seeing would get stifled. I hope that this doesn't actually come to pass.
Yeah, you definitely have some crypto users going, wait a second, you're saying Wild West like it's a bad thing. Now, Christy, we have also mentioned, I know we've talked a lot about El Salvador and about the price swings amid the country's first day of Bitcoin adoption. So what exactly happened to create all of that price movement, and are we close to stabilizing?
Well, the thing is, it wasn't really even linked to El Salvador. Sure, it was a little bit of buy the rumor, sell the news kind of thing, with El Salvador adopting Bitcoin and making it legal tender for the first time. But in essence, it really wasn't even about them in the first place. It was just another leverage trader blowout that caused Bitcoin prices to dip on Tuesday. Bitcoin crashed about $9,000 due to this massive unwinding of leverage traders and borrowers who bought in on the news that El Salvador is going to be officially launching Bitcoin. And basically, in a classic domino effect, positions then unwound to create this cascade of liquidations and positive feedback loop, which severely impacted spot pricing. So even though open interest was just crazy high, spot margin borrowing was also peaking, which then also led up to the crash. So strong dip buying then swooped in, suggesting that cold feet amongst the real Bitcoin hodlers, they were not involved in this event. According to Whale Map, which is a program that tracks large crypto wallets, large volume investors who were also newcomers to the market, so these are investors freshly into the crypto space, they were actually the vast majority of the sell side pressure. So also worth noting, the sudden drop in Bitcoin also coincided with a very sharp spike in the US dollar index, the DXY, on Tuesday as well. The DXY benefited from the rising US Treasury yields ahead of the government debt sale this week, which includes about $58 billion in 3-year notes, $38 billion in 10-year notes, and $24 billion in 30-year bonds.
And now, Michelle, with all of this swing that did happen, and of course this news regarding the SEC and Coinbase, how are crypto and blockchain-related stocks reacting to this?
Well, what's so interesting is that you can really divide the space into stocks that deal with the space like the mining stocks but have no actual coin exposure. And then, of course, the companies like MicroStrategy that have direct coin exposure. And what's interesting is that the mining companies, everything has come down, but they're actually holding up pretty well as a result of, in fact, actually probably offering a new buy opportunity because they were getting a little rich. In terms of the companies like Square and MicroStrategy, they actually peaked in early August and have come down since. So if you look at something like MicroStrategy, it's down $30 from the high, $20 over the last couple of days, but it's coming into major support here. So I would actually think that if we're looking just as Bitcoin as that sort of granddaddy coin, if we can stabilize around this $46,000 level, some of these other coin-based companies like a MicroStrategy and a Square, a Marathon, there's quite a few, would actually present a new and cheaper buy opportunity. And if we look at coin itself, COIN, even with all the news, that also has come down, but it's reaching a very critical support area at around 250. So we have our eyes on it. We think this could be a buy opportunity.
Boom busts. Christy I and Michelle Schneider of MarketGauge.com. Thank you both for breaking this all down for us today.
Thank you.
Thank you.